Okay, so last week the market was getting into this new territory, and it was a big breakout, and a lot of the people that trade breakouts that only last for a little bit would have got in on this trade. And I had the 3-period RSI on this bottom panel, and the problem was I discovered that I placed the wrong settings on the RSI, unfortunately. So I looked at the video and I looked at the chart that I just brought up this morning, and the problem was that the RSI can be built on highs, lows, or close, but the default setting for the nobody typically puts this on the lows. So in the last video I had this set to the lows, and the problem was when you looked at the chart, you can also set it for an averaging. You can set it for a previous indicator. You can really get wacky with it, but you can set it to the open or the close. Now if you had some robot that was actually going to see that turn between open and close, it's like 5 seconds or it's 1 second, and then we start the next phase. Are we going to go up and down from here? So I had it on low, and it looked really awkward because it did not sync up with the price. But if you had it on lows, imagine you're trading RSI and lows, you probably want to put RSI highs up there too. So another thing you could do if you're a volatility breakout, if you are drawing your trend lines on these wicks, so say it looks like this. Let's see for the lows here, right? If you're trading you want to enter on based on the fact that you can only see RSI lows here, you may want to put a 1 period. You may want to change this moving average to lows also, right? So you get this mirror image. You get the true what's really going on when you see a failure in the lows at the edge of the market. If you're a buyer, you want to see what the lows are doing. The lows in RSI and the lows and close are there's a window there, and so when those guys start to really tighten up in the triangle forms, if you wanted to trade more aggressively, you would simply you would run your sell stops based on the lows of RSI, because you want to get in the stream coming down. And so more overbought lows would mean start running, and the other criteria would be that the candle is small or the bar is small, and start placing those sells in there. Now when it's overbought above 70, say, you just start putting sell stops in, and they're going to get picked up in the trade wind going the other way. So really the ideal situation is to get in when it's just making lower highs. Each bar is going down, 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 down. You can see if you have a high RSI plotting highs only, that's dedicated to that entry technique. So you can tune your indicators to how you get in the market. Because if you're not buying on the clock based on okay, so much time just passed, boom, then so if you really want to get the most bang for your buck, you would run, if you're an RSI, and this is where people would say you're getting carried away with too many indicators, but if you know what you're looking at, or run this on a demo. So in other words, if you have one indicator strategy or a technique strategy, just get a whole nother demo, start running it on that, get it to run on that, then come over and put some real money in that broker or another broker that trades in the similar spreads, because all that's going to matter. So when you're really going to build a trading system, mechanical one, some that's based on some real legitimate facts that there's a limit to everything, right? And you see the New Zealand dollar banging on this 99 cent. You just like, really? It's just like that, huh? Yes, it's just like that. So in other words, if you no matter what you do, it's going to cost you. You could either rent a home or you could buy a home, but you're still coming. You have whatever you do, you still got to come up with money. And in this business, you still got to come up with commissions and spreads. So you have to make up that commissions and spread in some way that even if you have some outlandish idea about this is going to happen, at least you can have the go-to. Somebody has, I guess, the common. The common area where everybody's just trading in a kind of static manner, and then the market explodes, but you want to be picked up in that explosion, right? You want to be at the 0 point, have pending orders at 0, and then when it breaks out and runs, you have to have some way to get on the train, and you could buy at the market, but it's always better to wait for a pullback, and you only have to wait usually about 30 seconds, and there's some type of up or down movement. So at that point, it's almost like jump rope. If you were trying to make money by how many jumps you could do in a jump rope, the first jump in, then you jump back out, or you jump in. You can only focus on 2 bounces, and you get back out. But then you watch the jump rope. You have to watch the jump rope up and out. And then once you get the rhythm down, and then you have a go-to button, which you could make this, you could just say the rule is that when RSI gets above and really tighten up you're only getting extreme trades. These are 20-to-1 risk-to-reward ratios in the end. Because if you're going to wait till RSI presses into, you put this to go to the indicator and set it to really like 90. Put this on, because if you're running a RSI of 3, this stuff's got to be at like 90. I mean, or you're just going to hand draw it on there, and that's another option. Instead of picking a hard level here, say like 90, and if you're going to go with 10, which is right on the edge. You're not going to get a lot of trades, but these trades are insane. Absolutely off the charts. I mean, literally. RSI at 3, this is like your clutch. If you're driving a manual transmission and you're drifting into the light, you're going to either downshift into this thing, comes down, and this is the lows only plotted. So, oops, I guess I didn't even, I got the wrong guy. Here, sorry, this is, so what I'm doing here is, you got to save that. So, and I'm going to take this guy off. This is just Fibonacci drama. And so clean this up a little bit. And then I'm going to add 2 more RSIs to this. So if you can see here on the Dow Jones, it doesn't matter. I'm just using this. On the lows here, you're down here. It's okay to start buying at the market. Buy at the market down here. Now you could say, well, I don't know. That wasn't, yeah, but you still got chopped. In other words, and this is buying at the market, when you see it, like right now, you're buying at the market. There's no way around it, right? You're below 10 on the lows of RSI. So the close I would put in. So what I do is when I come back and add another RSI on top, I'm going to see it's going to hold hopefully the last settings that I chose. And then I can come back and adjust all the oscillators to be running at high, low, close. So I'll set them all to low first. Then I'll come back, and this isn't too much. I mean, you're really only trading one indicator. I know it looks like a lot. I can't run stochastics because it's in a whole different language of smoothing. In other words, stochastics looks to me like just going up one more time frame. I mean, you just went from a 5-minute to a, but it's all this smoothing is dangerous. There's no smoothing in RSI. I mean, it really isn't. It's a pure raw index. It is about as objective and unbiased as you can get. You can't say it's overbought or oversold, but what do you do about overbought and oversold? And when I put up 3 of these, insert 3 of these guys, and then you'll see how it stacks up here. So RSI is definitely, you can make a lot of money, or it's going to tell you how to get in the market, which is, I think, is most critical thing is how to get in. So the first one, I'm going to set this one to highs up here. So this would be the oldest one in the list. We'll set this to the highs of the market, and the middle one will be closing, and the bottom one will be lows. I don't know, it's kind of logical. This is like a Alexander Elder has a bullish and bearish power. So what I did is I took his concept and I put closing power too. There's bullish, bearish, the highs, lows, and the close. That's all there really is to the market. It's a triangle. It's, there's three things. So 3 is critical, and this one is going to be close. And I cannot multitask. I just discovered that, sadly. So this looks more complicated naturally right off the bat, but now we'll just do a look at trend lines on lows, and trend lines on close are different. So this is when people are drawing these wick, like anybody that's into this wick drawing, where the trend line is across, say here for them. I'm not going to zoom out too far because I don't want to, because it's not a lot of wicks on this market. This is not really like Forex, this is stock market, but here's a situation. We're waiting for it to come back to here, whereas the closing view is that this was the trend, and you're projecting, you find the, let me just make this white, this line, but I mean, there's the technique that I learned from the RSI guy is that it's like this. You see this pullback happen, and even if the market's right here right now, you still have this price pulse that you're projecting the highest point between those two lines. And you get your target, and you get it on time. Now, just that one move, great move. Now you look to the RSI to see if there was any kind of way to place the order. Now the top panel to me would be a buy stop entry, because I'm waiting on a small candle, small bar. The rule would be you're waiting for a situation. Now you have to draw trend lines on all this stuff. I mean, if you're really going to do it, you got this resistance. You got this, there's a channel here. So once you start to treat, and this is just the highs only, but this is enough because we're only trying to make money in the next week. We don't care about next year. We want to make money next week, or in the next 4 hours, whatever you can really start, because this stuff you'd have to keep updating, of course, right? So here's your little baby channel here, and so if the highs break out here, hopefully you put a buy stop as this is dropping, and you're getting the I did not plot the highs on here, so you have to just kind of, the problem is that this only correlates to close. So you'd have to come in here and maybe choose, and this is where it gets messy. But once you start to go there, you have to go all the way there. You cannot, if you decide that you're going to run an oscillator, you have to really dissect it, because I can't understand why you would want to look at that thing and not be able to immediately identify. Now you can make these different colors. I'm just going to go with white, and I'm going to trust that I can pick out the visual. I keep all the colors the same. That way you're actually picking out the mountain peak concept. When you put colors on there, and even if you see a green candle up, red candle down, unless you know what to do with that situation, it's meaningless. In other words, unless you know how to treat a down candle, treat it as far as is it too late to get in the move? I mean, if the market happens to be moving the moment you see it, and that's always a consideration. It's just funny how that all queues up, and so I'm going to keep the colors the same. I'm going to go for the highs, and then I'm going to put a low in there. I'll do the highs first, so I don't want to overload my brain there. But the highs would be, there's no, here. So you're in an uptrend, right? Now here's the reason why this below 10, this is the highs, which gives you the hammer. But see how the high is touching the close? Now, it's very interesting. And now, if you really drill down, this is the day. I'm sorry, this is 1 hour, but this could be any time frame. 1 hour, you got to be quick on the draw, right? But this would be a situation where you only had one entry on this day because you have a pending buy stop. As that's dropping, even if it's you don't think it's going up, the buy stops won't get filled. And when you get the small 1 hour candle, you got to be hitting that buy stop key. And would you hit the market key? Well, that would be depending if you're buying every hour. And you probably should if you're bullish, right? It's okay to get stopped out of this first pullback. But I think you're going to make a lot more money if you have trade plans for situations that are always going on. It's always happening. So here, this pullback, and for the sellers, the stop entry sellers on this 1 hour, they got short, and their stop was here on the highs. So you can see as the highs come down, the close was the first thing to go down. The highs are still going higher. And if you're looking for divergences based on how you get in the market, or you're just looking for overbought and oversold, so it keeps you out of all these trades. You wouldn't have sold this. Now, maybe I went too far with 90. You could go 80-20. As soon as you go into 80-20 on the settings of RSI here, now you're going to be, if you're going to follow a rule system of oscillator, overbought, oversold entry in just for whatever, range trading or its continuation of a giant move, then it's going to be, you can see here how you'd have to play it. Now here there was, you would have pulled the trigger twice here. These were bigger trades because it went so extreme. It went beyond, insane. And this is the 1 hour. So you had, from the sell side, now I got to put in the sell line. So as you can, this would dictate how you're going to execute. And you have to look down at these lower panels here and draw trend lines. But now, if you're drawing a trend line, the nice thing about waiting for a trend line to break is that this is an anticipation trade. There's a high probability for it to. It's just one of these cliche moves. There's always the kickback, though. That's the beauty of it. That there's always, once the volatility picks up, if you stand back, trade wider, and trade deeper, and then when the market quiets down, you've got a trade plan for that situation before everything gets insane again. And it's like the seasons, you have like winter, which is people don't want to trade if a market's too quiet. They're looking for other stuff, and not realizing that the opportunity is in the process of forming for a huge move, and you just have to go in a different mode, So unfortunately, you have to kind of have a little bit of a different approach when things are in different weather conditions. You have to have a coat or maybe a raincoat. You can't go out there in winter stuff because it's going to get soggy, all that stuff you're wearing. Now here, if you zoom in enough here, it's not too brutal, but now, or you could make this color, the highs match the highs, but I don't want to overdo it because I've done it before, and the problem is every line's vibrating a different frequency, and it's less trend line. It's more of like, oh, it's a bullish candle. I just don't even want to think about bullish, bearish, but so the highs here, if you're a wick trend line drawer, so let me do a zoom out here of the way people figure. So if the wick guys have their trend line here, then you would go to the lower RSI and do your trend line there too. So you got a chance to buy if you're going to treat this like that's support. You're just buying, and this is without trading limits. You're just trading at the market and buy stops on this system. You wouldn't trade limits because unless you're just throwing that in there, this would be a market and a buy stop only system because I don't know if you could really, you're defeating the purpose of going with order flow, psycho limits, or that's kind of a flash. Well, it just seems like you can't, once you get these many things going, you can't start adding too much. You have to see if this works first, but it does work if you look at it, because it's keeping you out of trades. But it's an extreme entry, order flow, execution concept, pretty much. I think once you start throwing outlandish, which you can write scripts like that to do specific bizarre things, but then you're into territory of, I guess, you step out of mechanical trading, you go into discretionary, like, oh, this looks like a good idea. That's when you go into, butterflies and bat wings. But if you want to just have something that you can kind of look at and go, yeah, I think so. And then think about closing dynamics as opposed to the high and low wicks is big. There's a huge difference. It's pretty mind-boggling, especially even on here. Let me just delete this and start over. If you look at this highs, you get this. I got to go into the just draw on the screen mode here. I can't take the way it's going here. Let's see if I can get a good. I'll give you a lot of options here for color, but so just where was that? Oh yeah, this high. This almost looks like a closing situation. Like you see these kind of moves in closing prices like this. So that kind of behavior, this choppy close, the lows keep just sagging down. This thing, I mean, come on. So if you're going to put in, since this is the highs, you got buy stops running right now. You just have to. And so this system would force you to also here, you would be, say, every time we get near here, if you've moved up your threshold to here, you're buying down in here. So you're buying on the clock. Every time it's down, you buy every hour. Every hour it's down, you buy. Buy. And then here, you don't have to place orders for this. I would say if you filtered it out so you only had buy stops here and buy in the market, or buy on the clock, buy on time-based cycles. So you can always see the, that's a dreadful color. That's not going to work. Let's try this. I'm colorblind, so I have no clue what that color is, but it's about this thing here. Let's go with this brighter color. Yeah, I'm pretty color sensitive. It's got to be just right. So if you brought this threshold, say, to here, and you're only scaling in this tight window on buy stops only, that hopefully evaporates. So the lower it goes, the riper it gets. Here, you might have got trapped. See, they trapped you. And here we go down. Buy stops like you can't believe. And I'm sure that was a nice money-making trade because it closed higher. RSI almost reached here. And as far as the low story, you were running sell stops in here to make money on the way back. It's always in system. Always in trading, stop entry based on, well, the fourth component in this system would be, what's the range of this bar? And is it a doji? If it's a doji, it's okay to put in a, how do you justify your entry? Well, you put in a, when the lows go higher, you're running the sell stop. You just are. In closing prices, the first rally, you sell. The first rally. And if you treat this like price, see the structure in the RSI is the same as price. So it's that same pivot. So you could have a 50 line here. But I don't want to overdo it. And this would be your doji in RSI. Look right, come back, find support. But you want to have your buy stops below the 50-yard line. You could make a system that's very aggressive. Put some buy stops. Every time you're below 50 and you're just loading up, you don't care. You're like a pig. You don't care. When this thing goes zooming up, it crushes in, you've already made money to here. There's probably a pullback coming. So you would have to time that entry. So when they say you can't time the market, well, that what they mean is that it's very choppy on close. So notice the chop on close, and notice that the lows just have a slow curve of down. Now so when you were looking at the, I guess I'm jumping around top on my topics here, but this is something I did years ago in RSI when I first got into it, because but the thing is, how do you use it to get in? So here, as you can see, this was the positive or negative reversals that I was shown. Yeah, they showed me that. It worked out good. But if you're getting reversals in lows and in highs and close, something's up. And you have a lot more confidence to place a buy stop style order on the signal you get. And you can actually, if you came every hour to this chart, you'd be able to place the trades without too much fear. Now, you don't have to wait for the RSI to get down this low. This is kind of a vacuum forming. There's another signal in RSI, and it's call it what you will. It's the inversion of divergence. And here you can see that this high, I'm sorry, this pullback high is higher than this one. So you have an up angle, and you have an up angle there, which is inverted to correlated to the highs in RSI 3 period. More oversold, higher price. You would project higher off of that. So I guess you have to find the highest high within these internal highs, these pullback valley highs. And that gives you this projection here. You don't really hit that price till later on. Now, in closing prices, the reversal is, you're looking for the same thing to happen in closing price. More oversold, higher price. Divergence caused it. So there's a cause for the effect. In other words, momentum dies out here, you get divergence, you come back. But when this really comes back and it's trapping the bears, they're like, oh yeah, the divergence is going to keep going. They're trapping they're trapping the indicator too. It's built on the same thing. Here, as far as the lows go, another reversal. You're getting a reversal in lows, you're getting a reversal in close, and you've got a reversal in highs. See, this is lower compared to this high. And you're forming a triangle. So it's a little redundant, but to have style of entry and be able to relax and just, it's here. If you miss this top now, this is the 1 hour chart. If I go to the 4 hour or the daily, where the hell are we at here? But this climax movement here is where this is a trend trade entry. When you see a pullback, yeah, that's the trend. That's that price pulse. This is either wave 4 or wave 2. Wave 3 should be the biggest wave, and whatever you want to do with that ABC nonsense. But in the end, it's about, what do I do now? Now what do I do? Boy. So obviously buy stops. And it's just the systematic approach to, and you're kind of buying here a little bit. Yeah, maybe it doesn't go up, but it doesn't matter. It's not going to fill you. You're not going to lose. But the volatility is so high right now that you just like I said, if you're going to do mechanical, you're not going to place outlandish buy limits way deep going, oh, it's going to come down. Why? Because you want to get short if there's a chance to. Or if the system says do it. If this RSI, this low gets all the way to here, yeah, you're putting in sell stops now. If this RSI gives you a reversal, so you're looking for reversals, this is your only reversal, and I don't want to go too, this is the only one that comes in. You get a rally here, you get more over, now that you know you're going down, or there's no trade available other than looking for trend trades right now. I mean, back here, of course. More overbought, but price is now lower, quite a bit actually. And you've got a bottom becoming a top on the hourly, and you got a bottom becoming a top on quite an angle. You have to pull the trigger at the market here. You can't put in sell stops, or you could, but same thing, right? You're going to sell within a very tight range here. No buy limits. I mean, no sell limits. No buy limits. You're just. This is the only breath it took, and you just sell at the market on the clock. There you go. Or you had the sell limits here, hand placed. You just can't throw in a random. Got sell limits, tight stops, hand placed here. So this compression level, the pullback, it squeezes in there. This is it. That's why trading on the clock, this high-low stuff, very few entries. You know, the are not good trend trades for continuation entry, how to get in a triangle without getting chopped up. But like here is lows. Here's a divergence in lows, but there's no divergence in close. So I'll take a look at that section of the chart. And because obviously these lows are, you could even go as far as, and I wouldn't want to go too off the rails, but the lows are diverging against the close and the highs. Something's up, you know. And so that could be a big move on the chart. See if I can go to that part of the, just come down here. So let's see what that looked like. And if you were just looking at this indicator, you have to really run it like quite a bit of the panel like this. And this is why I chose 3 period, because it's more dynamic. I know people have 7, 5, 14 was the original. But after I saw the guy that I took the course from, and he had a 3 period with a 3 period smooth on top, and that's his willing. He had a 3 period running, but that's your signal entry. That is the crux of the apex of the breakout. It's as tight as you can get in any of these markets. It's it. There's nothing tighter. Here is a sell signal on this sell off here. This is more overbought than on closing only, and this isn't. There's no signal there. There's a signal here for sell stops. As soon as it starts coming above this line, you're punching sell stops, and you get a reversal in lows on the underneath of that, because you have this situation. Then market's tanking. If you're not on that train, you're screwed. And not only this, you would have a little bit more. Say you're getting in at the 80 also on that reversal, you're really loading the wagon on that, because you're getting closing, and on the clock, the first trade above, you sell here, so you're taking some heat, you sell there, but you got sell stops in here stacking up. You're getting in quite a bit based on 3 criteria: high, low, close, and you're also the sell stops running up in there, or the selling at the market there, and selling on stops based on when this guy goes above here. There's nothing you can do here when this is the tops other than look for, say, divergences or reversals. You're always looking for a divergence or reversal, and this like strange thing, you get this really choppy tops and bottoms, and to me that's the kind of the hidden area of entry. Now here's an example. You could also just run three brokers: a closing broker, a high-low broker, and a high broker and a low broker. So nothing but buy stops on this one platform. Nothing but, that may be too much separation, too much diversification to diffuse everything. But like for instance here, this is a higher. This is moreover bought in lows, and here's the lows. So your closing entry is terrible. There's no signal. Here it's a great sell stop signal. Place a sell stop in that inverted hammer. If you missed all this stuff, now you'd have to have your protection here, or you're on the, or you just put sell limits in a crop up here, but that's outside of this style. If you're going to try to have a, some kind of almost robotic approach, and so you're always scanning for just divergence and continuation things. Or you could do the good old-fashioned, okay, this is the trend line, breaks, comes back, finds support. Where am I at in the chart? Okay, you're down here. And these highs give you the signal there. The price changed in highs. Go back to this. So here are the setup. This is not. There's not really a signal there, but now. So sometimes no signal. That's great too, because you're not going to overtrade it. But so going into the reason is that the last thing I did about this on the daily charts, when I was doing the last go to the daily time frame, I kind of reminded me of this whole thing about the what you plot the indicator upon, because in the video I had the lows. I couldn't figure out why this wasn't sinking the price. So the setup there was that we were going to break out, and I had a trend line on what I thought was the closing price, which is pretty funny, and it was right here. So even the lows are above this breakout here, and I didn't look at the closing prices yet, but this was really supposed to be the signal was right here. Very steep, very steep. If you compare that to this, and now we got to go for the zoom in, because we're on the daily now. Who cares about, you just can't care about that stuff. This is, and also a 5 period, a 2 to 5 period move. In other words, a triangle, a tight triangle is going to make more money than a long, sloppy triangle, because everybody gets to that point of it's got to go one way or the other. And so I had my trend line there to break. And here the trend line has broke and pulled back. So they're almost doing the same thing, but this thing's crazy. So time to think about sell stops if you're running the dailies is you start to come near the 90-yard line, wow. And but the highs aren't giving you any type of signal for as far as what order to place now. I guess you look for divergence in the highs. Here was a failed divergence in the highs, so a lot of people, if you wanted to sell right into divergence, was definitely the way to go if you're seeing it and you think, oh boy, look at this. And this is why you would trade the market on the system or at the end of the day or something, because like this divergence right here, shallow, but it's there, and here's the closing divergence. So people are selling into that, and they're not getting the follow through the downside, and you see this low come back into all of these. Here's your doji of highs. Like if you were to plot just candles based on, it's almost like you can see how that pullback and the highs there. It's crazy. It just goes flat. Our site doesn't know what to do with that. But yeah, it was built on close originally, and I think it works on the these are the peaks and the lows. So people draw a trend line like that. Yeah, the breakout, that's where you get in. If you drew a trend line like that on price, let me scooch these down because it's a little bit too. Yeah, I made those pretty wide. Normally, now if you had it, you have to kind of figure what you can tolerate here. And if you're only trading the last known signal, like you literally don't look back, This is a zero look back system also. There's no look back. And you probably want to chart it like this vertically. You don't really care. It's all about the setup. So you have to just trust in the system. Now you can see they trap the. So let me just delete this. So this is a whole different view of the world. This is like, well, what's going on? I can look back to test the system, but if you go into trading mode and truly going to trade these oscillators, you don't need to have this much data, right? You only know this, and this is this is looking back. I don't know, to the last so low. So I do the same thing on the S&P. Now you can save this template. We'll save this template, and then we'll throw it on the other charts here. And I'm going to take off all the grids. The grids on this one. This view of the world is kind of scary if you are you feel safety in looking back. This is the same thing in life. If you feel safety in having photos on the walls of all your relatives and everything, and you can be a little stuck to the past, and some of these markets move in such a way that you just have to have a mechanical approach. If you're a scalper, you might still want to have a mechanical system running in the background that makes money. So load this template on all these vertical charts, and you get a perspective that's, or throw this on a demo. You don't have to trade it, but you kind of see what's going on. And just a blockhead kind of, duh. So the first thing you see is the daily euro smashed down. Time to start putting in too late for the here you got trapped, like on the daily. If you're buying below here, if you didn't scalp out of some of that, but on the video, last video I said on the 1 hour, was it? Let's see, not the right. Yeah, that was, you can't see on here because I got all these lines in here now, but that this was a target. If you were along the euro, the target had to be this wick, right? This lower wick. So it looks strange now that you put the RSI in there. Everything you do changes the perception of whatever. It's complicated because how the style you trade leads you down a path. Whatever path you choose in the beginning of this whole system, you're stuck with going that way. Like if you decide you're going to paint in black and white, okay, there you go. Now you could add color later. You could also destroy it by doing too much. So in these system trading systems like this, you have to have a rule set and just go for it. Now here's divergence in the highs on the daily, and there's the pullback. Now same thing on the 1 hour, but it's the daily now, and a little bit less signals, a lot less. I mean, I can't even see a signal on here, honestly. But there's nothing really to do here except buy on Sunday night, buy tonight here, because you're going down, and the lows have divergence right now. You could go take that out, but for the moment we're having a problem getting the lows to keep going down. So you gotta buy the Dow. That was just a scalp there, but you can almost not tell which time frame you're really on. It looks like the hourly to me, but this is the setup we had on the hourly euro dollar actually. So you're really looking into this thing. When you look at these markets, you're like, the more you look at them, the more it just becomes about what would I do right now? What would I do right now? Like once you train yourself, and of course on the daily, there's nothing you could do right now other than just buy this thing and scale into it. If you had to make money in this currency, the euro dollar, this is a 1 hour chart, and if it's a daily chart and you've got deep pockets and you think it's going up, so But those risk to reward ratios is what's going to really make you money. But with RSI on this thing, you actually wouldn't even have hardly any trades on here. It'd be very hard to hurt your account if you're long here and you're getting killed if they do come down lower. But that would all depend on how tight your stop is. And here, when this thing went up, if you only took sell limits, sell stop entries here, they trapped you a little bit here. Unless you could have another rule, we just wait for the second peak in the lows of RSI. So you'd sell up into this, and yeah, they might have trapped you, and who knows how tight your stop is. If your stop's here to make this much, okay, you stop you out. Here you get another signal. Start putting in sell stops. Oh yeah. So daily, euro dollar. Oh yeah, you're still short, right? Or you have your if you actually had a trailing. Nice thing about lying on highs, you can see if you had a trailing robot that he finally took profits. He got stopped out. So he's being beat up. The volatility's increased. So you can see the volatility expansion real easy on this. As soon as this is up and this is up, it's like step back. I mean, not much to do here, but you can see that when you come back to here, are you seeing a reversal in RSI? Yeah, on the highs, so you're allowed to put the buy stops in here. They're going to smash you later. That's why you have to, this isn't always in system. As this is going up, you're looking here, see, should I put in a sell stop? And you're almost, if you set this filter to 80, you're putting sell stops right there. Just because. And on time, on the clock of every day, I guess this is your only like, okay, it's so oversold, I'm going to buy on the day. I see no reversals here. If you keep it so, okay, buy at the market. Buy at the market. You close below here. The highs are even below. Buy stop. Here, nothing, right? Because you can't, this is the buy at the market panel. This is the buy and stop panel. No trade here. Goes up. Okay, what do you do? Well, if your target, if you have, you could also say, well, obviously this is going to be a big problem. And a lot of people that bought here are just so thankful to have it come back to here. They're just getting the hell out. And so you could trade when maybe you figure that they're trapping the bulls on our side. You're seeing the same thing here. And if you, without keeping all the signals to like 2 to 5 days on this, and same thing, 2 to 5 hours on the other one. So you have to wait for the triple top in the highs. So if you keep selling, you have to have your hand place pendings in a tight range up here, but it's okay to start putting in the sell stops here. Anytime you're up in this zone, you're putting in the sell stops. So anytime, you could also say anytime RSI is above 50, and for every handle here, you put it in order. You could mark off, how big is my order at 100? How big is my order at 80 overbought on the lows? And you're just mechanically getting in this stuff. And then as time goes on, I guess you would just naturally build up a bigger position on these, because you're not getting filled here and everything's coming together there. Now you have to buy one at the market here on close. So you get in on that major sell-off, and the buy stops, if you've set your filter tighter here, you're getting in here. So you're in for this one heavy, because you got 2 reasons to get in, 2 styles to enter on that. And here you would be, for if you're going to sell, you're waiting for a reversal, so the market's got to go more overbought, and it's more oversold, so you're waiting for that chance to join that train. But you have to go, I'm just saying, looking back, how it would run. And of course, what do you do right now? So you have to know the rule set going into the current. Here's the divergence and highs, and there's your sell stops are running. And if you're trading this is a divergence here. in there, close, you would just be selling up into that, and at least you're not selling, down here when RSI is down here. So the overbought and oversold does work. And if you're getting divergence in highs, and you've also got the ability to, if you're above 80, you're putting in a size. And certainly when the market is kind of not really giving you a strong signal, maybe you don't have a big buy stop order here. But actually that was a great trade. It didn't come all the way down here. But you can also just be using your good old brain and just see there's a big resistance building up here. So let me just run through these charts here. This was everything got filled and killed and went the other way, and everything ricocheted on Friday. So Thursday was, I don't know if there was news or something. Who cares? It was really about filling this hole up here on the top side. So the gold's pulling back right now. There's no signal there other than if you're super aggressive, I guess you'd have to. I guess you got a reversal right now on this. So you have this. The lows are coming back down in our side, but they're actually higher. So very bullish. I mean bullish as far as very biased for. I mean, you're getting a signal. You cannot, if you take out this low, it might change the signal. That's the thing about, you're not waiting for the end of the hour. You're just going to look at this thing and say, well, here's certainly a trend line that most of the wick people have drawn. They tested that trend line. They bought there. They're long right now. And they've got the RSI trailing behind them where it is a reversal, where it's more oversold on the lows, and on the highs, it's so you have this situation, and then the lows are doing this. The lows are going up while this is pulling back. Closing price, it has to close below here for that to give you a reversal there, but it's kind of stacking up, and the highs don't really have a reversal. It would have to be a higher, like next week. You'd have to have this on Monday and Tuesday. This has to come back like this, and the highs would be actually lower, but this is still high. So the valley in here, and then you get swept up and in, and then you're just getting the hell out. At least I am. I mean, it was ridiculous. And here was that breaking out, making new highs here, but here's the trap and the comeback. Here's the signal in the Dow Jones on close. Connect these guys, project off the highest close within there, which is here, but they were already onto it. And here was the reversal. This is one of the this is kind of a longer reversal. You're looking all the way back to this low compared to this low, which is this low of that doji compared to this low. And you just would naturally have, on another account, a buy limit at this doji to get in. And the highs gave you the lower high. Just because it's not below here, you're getting a signal here. Time to get on, because a riskier trade, certainly, because it's a giant hammer, but a nice scalp at least. And it comes all the way back to the highs, not the close yet, but we can come back to the close next week. So you're looking for this to come down, more oversold, while maintaining. So this is the typical rhythm on our site. Closing price comes down, you're buying at the market. You just are. Because if close comes back to, say, here, in this situation, just comes back a little bit, but it's higher than this, then you've got the reversal, the inversion. So he's looking for this kickback inversion. And here it is. Not so, you're still getting you're getting confirmation for S&P 500 here. More oversold, almost even or higher. And the same long-legged look back here based off of this to here, and then project off of these lows to keep it strict. You would project off of the lowest low within here, the highest low within here, which is here. I mean, if you can stick with that rule set, and the euro dollar, we really didn't have a chance to get on the short train there on the daily. There wasn't really any. Here was the only divergence at the top here, and here was you had to have been short here, so you missed out on that whole move. Your sell stops would have come in here just naturally on a overbought stop entry strategies. You just have to break those strategies out there. So you did have the sell stops running, you finally get filled, and you just have to, I guess unless you get a counter trend signal, there's nothing to do. Just let it go. And if you don't have targets out here and you're already out, oh well. The only chance to really get on the short train was, I guess, if you look at this as a reversal, more overbought than it is here compared to these two. That's your only wedge in that indicator, but this is pretty much all you would need. You could live your life looking back 14 days. Don't have to look back to the beginning of time to justify an entry. Divergence in the highs, pull back. You got the stop. This is your buy stop panel up here. These are market orders, and these are sell stops. You have to keep. You can't be. This stuff here, because really that keeps it into a volatility based system. But this is mechanical trading, and it's a little more objective than, this. You're really not. You could do, I guess, Fibonacci on RSI or on close, but if you start stacking fib on this stuff, you're gonna just go down a rabbit hole. But, anyways, that's what happened there, and those were just really traps for the bears, and it was that breakout where they come up and get it, and the Dow Jones may take quite some time to get to that 1700 target that I was mentioning on that. If you got now at this point, I could go to the weekly. The nice thing about this view, it's keeping you away from looking too far back. Like I said, you want to break out the photo album when when somebody's at your house, you have to kind of be with them. You can't go too far into, I guess it seems to be real difficult. There's a balance point between sharing something and being there to listen and talk and have a in the moment conversation. Yeah, you can't get that too much on YouTube. It's the only version of it. But now if I go to the weeklies, and since it's the end of the week, I guess I'll just turn this into the weekly update of these stocks, bonds, and crickets and stuff. Here it's definitely going to be what the hell happened there? Oh, I didn't delete that. Yeah, so okay, so here it's a little more clear, and obviously there's not a lot of trading to be done on this with this system based on these things, because there's not a lot of trades in here. Not a lot of extreme moves. It's smoothed out just by the fact you went to a higher time frame. But so right now the euro dollar, the only signal here is put buy stops in, but it's very risky because you've got a higher RSI is pulling back, but it's still up there. It's really a very you probably have to wait a couple days to get in here now. I wouldn't step in front with a giant couple days, like a week and a half, right? And based on this, if you're doing like this, the only way to get in this thing would have been with a there's no entries. I mean, it's pretty ridiculous. I guess you have to look at just overbought, oversold. There is a slight entry here, I suppose. It's the fact that you have this is higher than this compared to that. You're comparing the highs. And coming in closing, there's no signal yet. You'd have to get this to come down a little bit lower and RSI doesn't violate this price. So even if it's a shallow reversal like this, it's going to be a good entry. This was divergence on the lows and divergence on close and divergence on the highs. Now this would be buy stops here on the weekly. It'd be a ridiculous trade, but I'm just saying, if you can imagine, you're really testing to see if this concept works of divergence of highs. So you have divergence off these highs, divergence off this close, and divergence off the lows. Pretty serious. There's going to be some retracement coming, and of course everybody's going to bail here. And the Dow, everybody's going to bail up here. So I'll give the stocks side by side here. So when you're looking over here, you can see on the weekly, you're getting divergence in the highs, divergence in the close, divergence in the lows. Very high, just amazing reversals. Not divergence in the lows, but on the S&P. And that's why you're getting closing divergence, and this is why I'm not a big wick drawer, because the highs and lows, you have to treat them like this bull and bear power concept. It just seems like the logical choice. You don't get divergence here, but if you have a strict rule set, that you don't take that trade. But on the S&P, you get it. Here, it just would have been, see, the closing price gives it, though. The closing price kind of tells off from a rhythm standpoint, and again, you get the more chop and close. So here's your buy signal here on the weekly, because you have a reason to get in, and here's your first reversal, second reversal. This, oh no, I screwed that up. No, this is no, there's no entry there, but it looks like it. See, the problem with the weekly, it's so dead. In other words, this really is going up, and this is coming back, but you're not having the inversion effect. You're having here, it would be about, if you wanted to go and start drawing trend lines on this stuff, you have a trend line here, looking to break, and it smashes through, and no, there's no signal on that. So it's kind of sure, gold could go up. We're getting our first divergence. Well, no divergence in gold, but time to start running on the weekly. I wouldn't do it, but your sell stops are running here just because of volatility. I mean, but obviously sell stops are stacking up here. People have protection. Everybody's all giddy, and the highs. So here's your rule set is the only signal on here is putting sell stops in, and may only scalp back to here. Right, if we're really going up in RSI, no signal yet. This is just going to be, well, it's going to have to pop above there. It's for you to get some kind of, something's got to happen to get this RSI to this idea that you're trading what's going on right now. And so the monthly charts are useless to people that are in and out of the market every 40 seconds. So I go the next time frame up is the monthly, or you could squish this down one level since you're so far back. But it's just too much. It's already too much matter. So I'll go to monthly, and let's take a view of the monthly here. Since we're coming near the end of the month, very close. So they trapped you can see they trapped the bulls on the monthly. We're just backed off of this high. I'm just going to do good old-fashioned range trade analysis here. Then here you trap the bears, right, on the S&P monthly. So this is when the wheels are coming off, and that was the scalp. You get in there. There's scalping on the monthly, and saying, look at this inverted hammer here. So there's a signal here. Here's divergence in the highs. Very, very, very bullish looking. Like if the S&P takes out this high on the monthly, Katie bar the door, and it's really going to disappoint a lot of people. I think the world's going to hell. This is called a pullback, and a big stocks will never happen. I don't care if the country's in debt up to its ears. Stock markets are inherently bullish. It's all pullbacks. Look where you're at now. There is no crash. There's only pullbacks because people just come up with different. It's just a belief system of price. There's no. All markets oscillate. It's just how long you're going to live to see the thing go up and down. Market's going to go to zero. I don't know. Is gold going to go to $1 million an ounce, or is it going to go to zero? I mean, be realistic, right? You're not going to live long enough to see some of these moves. So here is your first divergence in highs. This is losing momentum on the highs. Compare the highs only. Here is kind of what they call confluence. This matches price, but I'm looking for the exception for the severe entry. And monthly euro dollar. Wow, look at this thing closed down hard. That's crazy. I guess if your filter on the monthly is by these highs, you got trapped there, but here you're doing good. If your stops here on the monthly, I can't imagine, but here the gold market, big divergence in highs on the monthly. Compare these. This is going down. This is going up. Big divergence. Closing prices, big divergence, or certainly for looking back. What is that? 1 year, and big divergence in lows, right? Big trap for the bears. You can't see that coming. Who can't see that coming? But of course, 3 months ago was the entry. 3 months ago, you had all day long to see you know what, divergence. I mean, you got a year for that entry. You got 6 months to see that coming. That's a no-brainer. But that's a big giant trade. There's 1 million trades inside. This is 2 months of bull. Obviously, they trapped them. Everybody's going to try to buy here on the wick. People are going to try to buy back at this double top. And here was the kind of the failed sell signal on gold. Was back here would be almost a setup. Well, it was from here, like more overbought. A lower price, everybody's projecting that. They got their projections. On the sell side of the highs, of course, in the highs, you don't really have an entry to put sell stops. I guess you're looking for the lows. There's really not a reversal, but not that you would have you can see but it's more, the highs are higher. You're connecting these two, and you're getting the same thing at close. So you're getting a little bit of a confirmation from the top of that. But look at this is inside. The close is giving you that same thing. You're not getting that from here, but if you had got it, and it really got very quiet up there, you would get a situation where this became higher than that, and the lows are only here, and then one more slam down. But this is a major hammer on the monthly for me. If we close here, then it's just a matter of there's a slight divergence here on the highs. And then this thing just going to go up. Now here, I'll just one last zoom out on the whole thing. I'll take this monthly and zoom out. I know people like the big picture because they like to go back years later and go, see, I told you. But it just doesn't matter. I mean, I just want to make money every week. Here's an RSI. I guess just look at the closing prices here. I wouldn't try to, the highs and lows would be kind of tough to think about stop entries here, but you can't see the divergences. You can't see the that the Dow Jones from a consolidation standpoint. Just look at this. Look at this whole picture here. So here you could zoom out. You can't really see the contrast and stuff, but yeah, gold's going to go sideways. Dow Jones You're waiting for it to, the sellers would come in, and just for a trend line view, it's just going to always be, but this is about as complex as it gets. But notice the top is just insane on this. Look at this squeezing the highs up and up and up and up and just, wow. Now that's the argument for selling on that top part. But the closing prices, when RSI has divergence here, the buy signal is, in other words, this was the last reversal. More oversold than here, connecting the closing prices. This was the signal here to buy. Goes up, get divergence. This would be the first sell reversal right here, right now, coming off of this. Sorry about these colors. I just never happy with the color. Okay. Divergence and highs. Divergence and close. First reversal. Projected off a close. Find this. Maybe we already nailed it. Maybe that price pulse is over. They did hit their target. Now what? Come up here. Get choppy. You get a president that's a businessman. It doesn't matter. Reality doesn't matter. It's like when Reagan won. It doesn't matter. Reagan was just a cheerleader for American freedom. And that's all people you need to know, confidence-wise. I have a hard time believing that when you get this thing where people are talking about the end of the world, and I guess it depends what you're watching, but I just watched another Greg Hunter interview and just love him to death. But God, I'm going to buy him a microphone for Christmas. This thing, where else is it going to go, man? People run from one side of the ship to the other. Look at all these divergences. Look at all this thing just refuses to cave. Unfortunately, I can't put the monthlies, yearlies up, but it is fun to think about what's going to come down the road, and it's lovely. I mean, it's great, but wow, this is serious zone here. If this reversal, and of course for this, if you put your filter up a little higher here, this underneath here, that was the big crush down. But once again, these bears can't kill it. It can't keep a party. It's in an uptrend. What are you gonna do? I don't like trends like anybody else, but just like this sell-off. What were they saying back here? All right, 2011 sell-off. I would love to hear the news here. In fact, I'd love to go back to some of these people's videos, and it would just crack you up to see how people get sucked into things. We all get sucked into, really? Oh, it's only $100. I went and did that. I tried something. I'm like, I don't know, should I complain or am I just an idiot for doing that? Like, should I sue the guy that changed my oil, or should I just think, I'll rack that up to like my stupidity? Thank you very much. And that's how life is, unfortunately. But here, wow. What's going to happen? So if you're a wick draw trend line, you're like, it's got to hold that. Well, hell, it just closed up here. This may be the retest. It's definitely a wedge of some type. Once you break this out on the monthly, I mean, if you go flying through that puppy, there's going to be such a scramble. I mean, you can just see, but I would love to look back here and just break out the latest pick. Maybe I'll go track that down. That'd be interesting to see what was the headlines in 2010. This is such an insane, the end of the world. But guess what? There's a top here on close. Look right. Wow. And This is the RSI, kind of a reversal on lows. You didn't get it on close because the market is so. I mean, it's a monthly chart. So if you're trying to force a trade, which it does work to put extra effort in. Here's a reversal in lows, no reversal in close, no. Oh, here you go, big juicy reversal in highs. I give you a killer breakout entry, a volatility style entry. Let's see if I can get that on the chart. Here is the pullback in highs only. And it's a valid entry. Trend thing, but of course here's the big crush. There is the divergence in lows, though, to take that trade. Divergence in lows, down, sell stop. It's like a scalp kind of thing on a monthly. It's like Where's Waldo kind of thing. Here's divergence in highs. No chance to get in buy stops, and here, just not a lot of chances. Here's a killer 2-period or 2-month buy signal. More oversold. Price is flat or slightly higher. Project off of this. That's pretty trend continuation trade. Here's a closing buy signal. It's higher than it was back here. That pullback is very shallow. Of course, on the monthly, it's a ton of money. Yeah, I guess if you're going to go with the I'll buy anything on buy stops when we get in this window theory of life, then you're getting picked up on these just by nature, just by the flow entry. So flow entry, stop entry, market trading is based on the pace of the market, and I guess if you just kept it to that, you just can't get too excited about the buy at the market order, right? That's when you put that gun. They put that delay on getting a gun. They tried to keep the shootings down by saying, well, I have a waiting period so you can go home and realize that, okay, maybe you just have a real big ego and you're really pissed off. So, and that's just how it is. But yeah, it's going to be something else here, because if they do put this guy, this Trump guy, even looks like he's going to win, I could see this thing over anticipating. We're going to go to about, well, if you project off the highs, which would be the most bullish thing you could think of, is we're going right up to here. And this was nothing but a chance to get long. It was nothing but only because we have this hammer now. Now, this is going to be certainly. It's just funny how, I don't know if politics would enter into it, and that's what's really going to fuel this, but that's what they're going to say. In other words, the market does it, and people say they attribute it to something. You have to attribute it to something, but it's really nothing more than we're in an uptrend. I just don't think it's going to take a lot of work, and hell, there's buyers coming at this, right? You have to believe that this situation here, if this really holds, if you've seen this pattern before, if we take this out, yeah, there's a big problem. If you've already taken this out, so maybe the problem's here, and this would be the thing. But and if you just even retest this line in the future next year, you come into the elections here, and you can imagine the market slamming up into this, and then maybe the world does come to an end, right? But the world's never coming to an end. It's just in a state of flux. So that's the view of this thing, and the S&P is kind of the same kind of situation. This could actually drop to here. This looks like but see where they closed? I don't know. I think they just grabbed people. Where they closed right now, and it's the end of the month. If this is a doji or a hammer, those bears better be running for cover, because it could be all over. And I know everybody thinks, at least the stuff I watch, because I'm watching the dark side of town. And this will be, I can already hear the voices of all the Alex Jones bozos saying stuff like, see, they're running those stocks up and the world's coming to an end. And the media is making the market go up, and it's there. Oh boy, you know what? Alex Jones is making so much money selling fear that, I mean, would he really care? Does he really? He's just hilarious. And that I hate to go off on Alex Jones. I don't know if anybody watches this, but can somebody please tell me, why doesn't this guy get some throat surgery? Like, who talks like the crime fighting dog? Like, where does this come from? He must have had he must have been a singer that did metal yelling. I mean, this is what I think he's a metalhead. So I'm just wondering, how did that ever happen? And why doesn't he get a voice coach? Because the idea that you're going to puff your chest out to tell me a story isn't helping when the story is so ridiculous to begin with. At least put some credibility on it. Come in there with some type of like sports announcer voice, and just, I don't know how you say, I guess it's a living, right? But for God's sakes, we're all going to die anyways, so what the hell? Just sit back and enjoy the ride. Not to say you shouldn't behave and do the right thing, but man, some of this stuff is totally out of your hands, and when you get all excited, and I heard another thing where gold's going, this guy's cracking me up where gold's going. I don't have the whole gold chart. I get most of gold here, but this is going to be a big problem. Who's not selling up here, right? 1,500, come on. Obviously, right? We could go to 1,500, there's no doubt. And by Christmas, in fact, if Trump wins, but this thing could be range bound till you just can't take it. And there's a triple top. You just nick that double top there, $1,000. You're up. That's a nice rally. But here comes the sell signals. This thing gets more overbought than it was back there, but it's rangy. It's a rangy situation, and it's just it's all about time frame. So I'd be on the 4 hour of that. You can see buy stops are stacking up on your 4 hour. It's okay. You got filled on this buy stop. I'm sorry, you got filled on this buy stop. You got about to get filled. There's no signal here. On the clock you bought on that hammer. You just bought the close of that hammer, and you're going to go long one more gold here. So you go to 4 hour Dow Jones. The only trade here would be you're waiting for this to get the highs to get down so you can start placing your buy stops. There's really no trade there. Your sell stops have been filled. You're short on the 4 hour. You're up. You're making money. So how long you stay in that trade, I guess is what matters. When these RSI lows are up, you're putting on sell stops up in here, and you're getting filled on this just good old order flow. Now, something you have to decide. It's just a matter of pressing the button, and you have to have a scalp built into that, because otherwise, if you move to break even, they come to here tonight, they come to there, you're out, you never made any money. Always got to take something off the table. And this, let's see, go to the next item here. And this would be the 4 hour view of this one. It's just, you have to get to the point where it's pretty obvious what you would do at a glance trading without having to think about it. Your sell stops are here, you're already short in the 4 hour. So you're waiting about 4 hours to 8 hours to get filled on kind of a, I'd say put some serious early exits on it. If you kept pressing the sell button there and your stops up here, you got to get something, because otherwise you're right now, you're break even. You're screwed if it starts to reverse. But when this gets down here, the highs get down here, you're putting the buy stops. So the sell stops in, and you're selling on the clock. Say you sold here, you sold here, you sold here. This guy you're actually up on. So selling at the market and overbought RSI is not that bad as it looks. If you're trading every 4 hours, you sell. I mean, you can anger trade that. You sell here 4 hours, damn it, I'm selling there. And you got the sell stops running on the robot, and he's getting filled. But you got in at this price, and you're up on all those trades. Maybe this is your target, maybe this is your target. Next thing. We're trading both directions for sure. Because you got a heavy filter on this. You're keeping yourself out of a bunch of dumb trades. So the filter's so heavy that you can trade, if you're trading 4 instruments like this, if you're really doing this. Here it would have been buy stops. Buy stops in the 4-hour euro right now. Buying at the market on the clock. Buy. Clean 12 hours down. Clean as can be. So coming the Sunday night, if you're a 4-hour trader, here is a reversal in the S&P 500 4-hour. And the highs forming right now. But this candle's too big to really say put a buy stop here and get picked up in the tide. But the closing is in a reversal for sure. So you'd have to be buying at the market right now because you're getting a reversal here. This is more oversold than this, so you're looking for the inversion. And on the lows, you're getting the inversion right now. So you're coming in that window, setting up for a possible. And I don't know, maybe this it doesn't take much. Of course, you could always try to nail down this thing where they're voting only because politics are in the spotlight ever since Trump, ever since China said, well, Trump, shut the fuck up. And so there's going to be a real, America's, it's on the table here, and here's the pullback for the setup. So if this, I don't know, this next wave of voting, and you can already see them coloring the states and colors, and here's the buy stops running here. Here's your buy signal in the 4-hour. Not so much there, but definitely closing prices. You just keep nailing the buy button. Comes back to here, sets up, it's going there, right? Gold looks pretty fragile there, like maybe scalp to here. Maybe gold, just forget about it. We're done. See you bye. I mean, you got sell stops in here. You saw on the daily what that would look like. This is pretty hard, hard down there, and once again, sell stops would have your sell stops would have been here on this thing as you climax here. So you'd be up into that down, but you're gonna go the other way now, and your sell stops were triggered there to ride down into that. Sell stops on the lows. You're along that whole thing. If you missed that entry, it's over. You're waiting to get filled now in the other direction. Or you're going to babysit the closing prices and wait for divergence or something to show up here on the 4-hour. So not much there, but anyways, that's my RSI 3 period. And high, close, lows. And maybe this is a little difficult to see all this stuff going here, so you might change the colors, but it's a bottomless pit of possibilities as usual. And it should be crazy next week. It is going to be something else. Well, tonight starts in Asia, and then catch a couple scalps, pad the account, get ready for the next setup. Try to write some trade plans that are wide and tight, and that's about it.